Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TIME Interconnect Technology Limited Annual Report. TIME Interconnect Technology Limited offers a diverse range of products and services across various industries. At its core, the company manufactures and sells cable assemblies, digital cables, and server products to customers globally. The cable assembly segment provides copper and optical fiber cable assemblies, while the digital cable segment offers digital cable products. In addition to manufacturing, TIME Interconnect Technology Limited also engages in the trade of cable assembly, digital cable, and automotive wire harness products. This indicates that the company not only produces but also distributes its products to meet customer demands. Furthermore, it manufactures and trades robotic, medical equipment cable, and electronic medical products, highlighting its presence in the healthcare sector. The company's services extend beyond manufacturing and trading. It develops and trades computer software, indicating a focus on technology and innovation. Moreover, TIME Interconnect Technology Limited operates liaison offices, which suggests that it has established connections with various stakeholders to facilitate business operations. Overall, TIME Interconnect Technology Limited provides a wide range of products and services across multiple industries, including telecommunications, data centers, industrial equipment, medical equipment, automotive wire harnesses, digital cables, and servers. Its diverse offerings position the company as a comprehensive solutions provider in the global market. TIME Interconnect Technology Limited market capitalization of $31 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that TIME Interconnect Technology Limited holds a significant advantage in their industry. TIME Interconnect Technology Limited trades at a higher price-to-earnings ratio of 39 times and a higher price-to-book ratio of 10.52 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 65% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a company can be attributed to several key factors. In the mainland China market, revenue grew by a staggering 98.5%, while in America, it increased by 45.6%. The Asia region excluding mainland China saw a more modest growth rate of 11%. Within specific product segments, the copper segment experienced a significant surge of 133.1% in revenue. The server sector was another major contributor to revenue growth, driven by the AI boom and increasing demand for servers. This led to an increase in revenue of HK 500 and $99.8 million, or 49.4%. The data center sector also saw growth, with both the server business and cable assembly business contributing to this trend. Additionally, the acquisition of Liani Cable and Dejincheng Investment Limited (DJC Group) further boosted revenue. On the other hand, there were several drivers of revenue decline. In the digital segment, revenue decreased by 12.3%, while in Europe it dropped by 16.4%. The telecommunications sector was also affected, with limited production capacity allocated to the data center sector. Furthermore, the networking cable sector faced negative impacts from new tariffs measures and overseas orders were affected. Net income of the company experienced a significant surge, increasing by 69% from HK 400 and $63.8 million to HK 700 and $83.6 million. This substantial growth can be attributed to the remarkable performance of two key sectors, the data center sector and the server sector. The data center sector witnessed a 49.4% increase in revenue, while the server sector saw an impressive 132.1% rise. However, despite this notable improvement in net income, profit margins underwent some changes. Gross profit margin took a hit, decreasing by 2.9 percentage points from 14.7% to 11.8%. Operating profit margin also declined, dropping from 8.5% to 7.3%. On the other hand, net profit margin remained unchanged at 6.3%. Several factors contributed to these changes in profit margins. The increase in copper price led to a subsequent hike in selling prices, which had an adverse effect on gross and operating profit margins. Additionally, the RMB appreciation resulted in higher revenue for the company. Furthermore, the growth of the server sector and data center, driven by the AI boom, also played a significant role in shaping these changes. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, the company has consistently generated significant amounts of operating cash flow in 2025. The figures reported on page 2 and page 13 show that the company's operating cash flow for 2025 is $321,119 and $149,825 respectively. These numbers demonstrate a substantial increase in the company's ability to generate cash from its core operations. Furthermore, the net cash from operating activities reported on page 4 of $234,119 also supports this positive trend. The statement on page 38 that cash generated from operating activities increased further reinforces the notion that the company is experiencing a significant improvement in its operating cash flow. Overall, these figures and statements collectively indicate that the company is indeed generating positive operating cash flow, which is a crucial indicator of its financial health and stability. The company's debt level has undergone significant changes in the past year. The consolidated total liabilities have increased by a substantial 97.7%. This is largely due to an increase in bank borrowings, which rose by $153,846. However, there was also a decrease in loans from related companies, amounting to $166,920. In terms of interest expenses, some fluctuations were observed. Interest expenses for loans from Luxshare Group increased to $46.4 million. On the other hand, finance costs and interest expense both decreased by 18.5% from 2024 to 2025, resulting in a decrease of $13,554 and $13.5 million respectively. Overall, while there were some decreases in specific areas, the company's debt level has increased significantly, with consolidated total liabilities rising by 97.7%. The financial performance of various segments within the company has been analyzed based on extracted summaries. In terms of revenue growth, the cable segment stood out as a performer, with an increase from $444,325 to $251,269 between 2024 and 2025. This resulted in improved results from $542,388 to $698,912. On the other hand, the digital segment experienced a decline in revenue, decreasing from $3,188,252 in 2024 to $7,400,320 in 2025. However, it's worth noting that despite this decrease, results improved slightly from $16,935 to $198,781. The copper wire segment demonstrated significant growth in assets, increasing from $1,698,669 in 2024 to $2,411,782 in 2025. In contrast, the server segment showed no clear indication of performance improvement or decline. Interestingly, the digital segment's assets increased by a small margin from $1,341,850 in 2024 to $1,418,833 in 2025, with liabilities remaining relatively stable. Overall, these results highlight areas where the company has excelled and those that require attention for improvement. Management's outlook on the company's strategy is one of stability and growth. Despite the amendments to accounting standards, they expect no significant impact on the financial statements. The company has sufficient banking facilities to meet its current needs, and the net proceeds from a recent share placement will be used for strategic investments. The company is also expanding into new sectors, specifically the data center and server market, through strategic hiring and acquisitions. This move suggests that management is committed to diversifying the company's revenue streams and increasing its competitiveness in the market. In addition to these business-focused initiatives, management has emphasized their commitment to corporate governance, prioritizing high standards to protect and promote shareholder interests. Overall, management's strategy appears to be centered on maintaining stability while driving growth through strategic investments and expansion into new markets. The company has a history of paying dividends to its shareholders. In 2025, the company paid out a significant amount in dividends, with a total of $56,682,000 being distributed as both final and interim payments. This demonstrates the company's commitment to returning value to its investors. In addition to the dividend payout for 2025, the company has also proposed a final dividend for that year, which is expected to be $50,210,000. Furthermore, the company has declared a final dividend of HK0.4 cents per share, resulting in a total payout of HK50.2 million. These figures indicate that the company continues to prioritize its shareholders' interests by distributing a portion of its profits as dividends. That concludes the financial summary for Time Interconnect Technology Limited. Feel free to comment below, and I will be happy to answer them when possible.